it's, you're sitting in a financial food court. There are many dishes, there are many products. You have a diet, your body has needs. You pick the dishes that work for you.
And the AI will learn at some point in time, give you a cat answer. But a human being is a human being. So I do believe that financial advisors are here to stay.
My bolder prediction is that India should have a 1 lakh crore per month.
Welcome everyone to the Smart Money Show by 5 Paisa. I'm Radhika Gupta and I'm joined by two incredible people, two powerhouses of India's financial industry. On one side is a woman who's basically been a pioneer of change, of growth, of resilience. The girl with a broken neck has become a story of resilience, of growth in India. Well, beyond all of the successes and accolades that you see, we've got a simple girl who made the most out of the incredible opportunities that came her way. And on the other side, I've got a leader who's shaping and changing the way retail India trades and invests. None other than Gaurav Seth, MD and CEO of 5 Paisa, and Radhika Gupta, MD and CEO of Edelweiss Mutual Fund. Well, two conversations, one mind, talking about everything from the world of finance, and zero jargon, only clarity. Let's dive right in. Hi Gaurav and hi Radhika. Well, it's good to see you both. Very excited what's coming up next. Mutual fund is something that has been growing rapidly in India. But from the time, Radhika, you came into the industry, what have been the shifts that you've observed?
See, I think the number one shift is the awareness and acceptance of the asset class. I mean, on a lighter note, 10, 15 years ago, if you went and said, I'm a mutual fund CEO, लोग कहते या तो what is mutual fund या बैंक में काम करते हो क्या? Today you say that you're a mutual fund CEO. Now of course people know me. They're like, मैडम कौन से फंड में SIP शुरू करनी है? So the understanding and awareness of mutual fund as an asset class across all regions, many socio-economic stratas of society is incredible. And I think that is a change that I've seen in the last 5, 7, 10 odd years, and it's really incredible. So I think the asset class, the product has found acceptance. People know that ये आम आदमी का और आम जनता का product है. In that sense, it's Mango person's product, and that's an incredible change. Beyond that, a lot has happened. Regulations have improved. The variety of products that you have out there is available. The digital mediums on which you can buy these products. Now, you don't need a person to come to your house with a form. The awareness and content like this has all gone up. But net, what it's contributed to is mutual fund has become ghar ka product.
Ghar ka product. And obviously you mentioned the Aam Aadmi. I'll shift this gear.
Aam Janta. Aadmi includes aurat.
Aam Janta. I stand corrected. Aam Janta is the point. With that being said, Gaurav, I think one of the key things that is now prevalent is India loves financial markets. Retail is obviously booming. What do you sort of attribute this trend to? Is it better digital products, better product design? What do you think?
Look, I mean, there are a lot of things that have happened, right? One is digital platforms themselves, which is जितने भी ये digital platforms हैं, उन्होंने basically what they have done is they've removed barriers to investing. That is number one. So this is the fastest and the most effective way to scale participation across, as Radhika just said, right? Which is आज आपको अगर कुछ invest करना है तो ये नहीं आपको form भरना है, and digitally you can do it on the app. You can do a quick onboarding and KYC, and then you can start investing. So that is number one. Second is what digital platforms have done is just the whole information access. So information तो बहुत सारी है. आज तो आप ChatGPT से भी information ले सकते हो. लेकिन at the end of the day, to distill that in a place where you can look at the information, quickly बोलो कि मेरे को sip करना है और फटाफट उसको, so basically it is information plus being able to transact at the same time. That is the power. So that's what digital platforms have done. Obviously, the markets have helped. If you look at last 5 years, Nifty has gone up from like, 2.5x of what it was in 2020. So they have helped, and of course, this is there's a big reason why digital platforms have contributed to this growth.
Talking about digital platform and the AMC being in this one conversation here. Earlier, both of you all worked in silos. Now there are increasing overlaps, opportunities to create synergies. What is leading to all of this, and how can the synergies become stronger over a period of time?
See, I think there is a realization that there is no point in dividing the pie. We are actually not on opposite sides of the table, even though that's how we may be sitting, today. We are on the same side of the table. The opportunity in India is to expand the pie. The opportunity is to go from 5 crore unique mutual fund investors to 75 crore unique mutual fund investors. At least that's a dream I see for when we hit Viksit Bharat in 2047, 5 crore to 75 crore, when half this country has a mutual fund, Ghar Ghar mutual fund, because it's really a product that's accessible at 100 rupees. Now, to make Ghar Ghar mutual fund happen, we as manufacturers have to play a part, but people like these digital platforms, our distribution partners who take this product to every home, because finally all we do is manufacture. People who take this product have to be part of the journey. And I think there is a lot of education that has to be done. You know, a lot of the easy access has been done in the first 5 crore consumers. But when you take this to the next 30 cities, maybe the next 60 cities beyond the first 60 cities, you also want to make sure that that consumer has a good experience with mutual fund, because if they don't, they're not going to be there forever. So I think there's a lot of work to do on content, there's a lot of work to do on education. I also think that जैसे नए नए तरीके के म्यूचुअल फंड प्रोडक्ट्स आते हैं, you know, mutual fund industry used to be very simple in terms of its offerings once upon a time. As India evolves, that range will also evolve. So there's a lot of work to do there.
And you obviously represent the broken side of the business. What is your take on the spectrum?
No, I think the access problem, I would agree, is solved to a large extent. It's not like it will not permanently solved. I mean, the way people are interacting with platforms is increasing. You know, the AI coming in, will be at a point where people will just say, अच्छा ये चार SIP हैं, I have like 100 rupees to invest, or इस 4 SIP में डालो. It will be as simple as that. That technology still exists, right? I mean, it is already there. It's going to go mainstream, and the way people are going to interact with platforms is completely going to change. So that is going to further proliferate, you know, investing in mutual funds. And I'll give you an example from my other experience back in the US, where I worked for a long time. You know, mutual fund is as basic as like it is part of your I would say entire investing universe. You know, a very disproportionate part of it. So if you're investing for retirement, if you're investing for, you know, for building a home, etc., people are using mutual funds. All of your 401ks there are stuffed with mutual funds. So I see that same thing and the same shift happening in India, and obviously I would say the access problem to a large extent, but the education part of it is still a long way to go, because in spite of all of these shows that we are doing, and a lot of people have contributed to it, including mutual funds सही है, etc. मुझे नहीं लगता कि सबको सब कुछ सारी चीज़ समझ में आती है. You know, thematic क्या होता है, ETF क्या होता है, passive क्या होता है, मैं index fund क्या होता है, and so on and so forth. So all of that needs to be done at a much greater scale to realize this ambition.
And I think आपने एक बहुत important बात की है, which is making finance easy, is what I'm able to understand.
Right.
Is the barrier to entry more because of the jargons?
And you know, I have a book coming out which aims to solve this problem. This was not meant to be a conversation on that, but every time, and I meet a lot of such people, especially now that people know me at airports and women write to me, and even I was just talking to a colleague, every day, you know, 5-7 people will write either saying, यार 30,000 रुपए कमा रहा हूँ महीने के, but I don't know what to do with it, finance seems so complicated. या give me a mutual fund that will double my money in 3 years, which we know is not possible. So there is a lot of chaos out there. With a large section of the audience, and especially women audience, there is this feeling that this finance is too complicated for me. And honestly, a part of me feels very sad every time I hear such a statement. So I genuinely think our industry has a lot of work to do in simplifying this, to use my words, and making this as easy as dal chawal.
I'll go macro here. India's mutual fund industry is definitely growing.
Yeah.
But how do we compare to the other global players, and what can we learn from there? What I'm trying to understand is that, are we sort of creating our own path, or are we trying to follow and replicate something from there?
So we're making progress. See, financialization has happened in many parts of the world. Now, if you look at the numbers, I remember when I joined the industry, mutual fund AUM, if you have to go macro, was about 4% of GDP. Today, it's closer to 16%. Is that progress? It's progress. Is the world average anywhere near 16%? No, it's closer to 80%. So we've made progress, but we have miles to go. And it's a natural catching up, right? You know, as per capita GDP goes up, people have more money to save, awareness goes up, digitization goes up. all financial access goes up. So I think in some sense it's natural progress. We've made progress. I think in some ways we are, to give us credit, crafting our own story. So I was in Japan, for instance, and they were telling me that Japan hasn't managed to crack an equity culture the way India has. And you have to remember, in the 90s, Gaurav, people used to think the stock market was satta bazaar. It was speculative. Now there is confidence in companies. There's confidence in the Indian economy. You see stories of companies being built. That translates into great listings. That translates into people holding equities or mutual fund and investor returns. So the story is coming together. So we've been able to build an equity culture, confidence in our equity market. I think what we've been able to do with SIP and mutual fund Sahi Hai is a case study waiting to happen. I keep saying it's an HPS or Wharton case study that has to happen. If you look at a campaign like mutual fund Sahi Hai, nowhere in any part of the world has an industry come together, pooled actual money for the sake of education. When people hear that we have a $3.5 billion SIP book, and it's not come from 401k and matching incentives and special tax treatment, it's just come from discretionary money, I think these are wins.
What's your bold prediction for India's mutual fund space by 2030?
Bold prediction, I would say well over 100 lakh crore in AUM, maybe closer to 120 lakh crore in AUM. But my bolder prediction is that India should have a 1 lakh crore per month SIP.
1 lakh crore per month. Very ambitious number, you feel?
It's ambitious, but I joined the industry when it was 4,000, and if you had said 26,000 to anyone in 7 years, people would have said, are you crazy?
This will obviously come from a certain segment of people. Gaurav, have you seen a shift in terms of investor profiles, behaviors across these years?
Yeah, I mean, most certainly. Like, I think the number one thing is that which is cultural, which people now started believing that, look, if I invest in the equity markets, I mean, I can make sustainable income, or I can meet my goals. I think that is the number one thing. That is the number one. It's not like to say कि मैं सट्टा खेल रहा हूँ, or it is some kind of a gamble that I'm making. Even if you've taken like an index fund for that matter, आप index fund में डाल दो या ETF में डाल दो, passive ETF में, replicate the index and get market returns. Now that concept itself is going. Like also, if the market is giving you 12 to 15%, I put my money in this index fund, it'll give me like whatever minus the tracking error 14-15%. तो वो जो चीज़ें education की वो आ रही हैं. So that is number one change. I think second is the fact that look, which is both positive and a little bit negative, is that people have been buying the dip over a period of time. Every time a dip comes, which is surprising, FIIs are selling and domestic institutions buying, retail money is coming. It is unbelievable, which is great. But the fact is, I would say कि हाँ, risk real है, तो ठीक है, so you have your buffer. But as far as your other discretionary income is concerned, you should continue to invest. So that is, I think, the biggest change which is coming in investor profile and the behavior towards the market, right? The culturally it is changing.
Very interesting. That sounds like a very hopeful picture. What about you? What do you think?
I think so. And look, people, I mean, he spoke about SIPs and buying the dip, and people have always looked at this retail flow, especially the SIP flow, with a little bit of suspicion. 7, 8 years in the industry, every time there's a dip, people will tell me, अरे ये SIP book है तो गिरने वाला है, तो गिरने वाला है, अभी be in this correction, oh, this is not going to last. This is almost as if they're waiting for it to collapse. I don't know why. But I do think it is structural. See, again, if you go very macro, I think today's Indian is more aspirational. What we've seen between the Indian and I think there have been broadly 3 generations of India post-independence. People who were born into an India of conservatism and scarcity in the 50s and 60s, saw multiple wars, all that experience, government job. People like me, or maybe Gaurav, who were born into an India of transition, pre-liberalization, then post, and then people of the 20s and maybe early 30s today who are born into an India of abundance. In this transition from scarcity to sandwich generation to abundant India, aspiration has gone up. People are not happy earning 6% in a bank account and 3% after tax. When they see the economy growing, when they see unicorns listing, when they see real companies that they use being listed companies, they're like, why can't I participate in this growth? So, which is why I believe it's ambitious, but it is also structural. SIP, I think, has been a success because it's not just a return tool, it's a savings habit. हर आदमी की समस्या या औरत की समस्या ये होती है that I'm earning 30,000-40,000 rupees a month. What do I do with it? After paying tax, after spending money, what do I do with it? SIP solves that problem. So I actually think the real thing that is happening is, and I've heard people saying this, like in the 90s when people were rich, they would say, oh, I have one property, I have two properties.
Yeah.
I've heard people saying, I aim to have a 50,000 SIP book. Oh, मेरी 2 lakh की होगी, मेरी 5 lakh की होगी.
Big numbers and very, very ambitious.
And the fact that you're competing on how much you're saving and investing.
Very interesting point about spending habits and investment habits here. But the newer generation, the ones who will join the workforce, they may feel lost. What are the 2-3 things for a first-time investor that you would recommend to keep in mind?
I think first-time investor, firstly, I think India's newer generation is very, very smart. It's extremely aware. The greatest learning from me from my Shark Tank stint was that 8-9-year-old kids are the largest viewers of a show like Shark Tank. It's crazy, right? So imagine you're 8 or 9 year, and these kids come to me at airports, right? So your 8 or 9-year-old kid is sitting and watching TV and learning a word like equity or debt. Now, if you ask Gaurav and me when we learned the word equity, I learned it in college in a finance school. So that child is growing up with some awareness of equity risk. You may say it is imperfect awareness, but they know something about business. There are housing societies where people have these bake sales. I'm going to run a business, I'm going to sell something, I'm going to get a... There are mini Shark Tanks that happen in schools. So gradually, this is the newer generation of India that we have to understand. So I think we are too disparaging about the newer generation. What is needed is a lot of work on literacy. Unfortunately, today, financial literacy is not taught in schools. It's not even taught in colleges. And the kid graduates at 22, earning income, not knowing what to do with it. So the biggest service we can do is make our generation financially literate before it comes to the workforce.
Again, to keep in mind, the viewer who will be watching this episode, what are the 2-3 things that they should actually keep in mind before they invest their money?
Okay, so they don't need to learn how to pick stocks. It's a myth that everyone needs to learn how. What do you need to understand? You need to understand 3 things. One is, what are the basic fundamentals of investing? Time, risk, return. I call these the basic principles of investing. It's like the plus minus, division in math. Then you need to understand the core building blocks. What is equity? What is bonds? What is gold? Simple. And then third, you need to understand how you can put this together to make some sense for you. Bas.
Simple. That sounds practical. What about you, Gaurav? What do you think? 2-3 things to keep in mind.
So quickly, I would say number one is there is no right time to invest. So you could have invested yesterday, you could invest tomorrow. So just start investing. That is number one. Number two is risk is real. So, and loss of capital hurts. So वो उस चीज़ को दिमाग में रख के इन्वेस्ट करना चाहिए. जो चीज़ आप the capital that you cannot lose, keep it with you. The capital that you want to invest over a long period of time, do that. And those will be the 2 things I would say.
Very important. While we talk about growth, I cannot not talk about AI. Do you think AI has played an important role in transformation, whether it's the customer experience, digital product design, anything that you feel, or is it just a hype? Just to get your take on this.
No, I don't think it's hype. I mean, arguing that AI is hype is like arguing that the internet was hype or the smartphone was hype. I always say I don't think the story is ever, is AI better than me, but is AI plus me better than me? So it's a very sensible co-pilot. I mean, I have probably 20 conversations with ChatGPT a day, so I can't say it's hype. I think the implications as far as investing and asset management industry will take time to pan out. Customer service, I'm sure all of us will see material change and efficiency in customer service. I think it can be a very smart tool of financial literacy if used right, particularly in regional languages, explaining things, if used right. I'm not so sure about its sense as a recommendation engine because I would like to see how that evolves. I'm not so sure if I tell AI, pick me 4 mutual funds, I'll be thrilled with the output. I know it will give me an output, it's doing one even today, but I'm not sure I'll be thrilled with the output, but who's to say?
That's interesting. I know you value technology a lot. What's your take in this space?
Look, AI is going to transform everything, that's for sure. Now, to the extent that it's going to transform investing remains to be seen, right? I think, I would even go so far as to say that it'll give you recommendations, and sometimes those recommendations even work.
Yeah, right. I'm sure.
Just to get started, I think it could be a very powerful tool for financial literacy. for especially for people coming into the market who want to do what next step should I take, give me insights and so on and so forth. Now, that begs a better question that look, will AI remove a financial advisor from the mix, or where guidance is required, can AI be that guide, be the guidance? My take on it is, in long term, I think it will increase the value of human beings, even with all the data that you have, because I think that the emotional intelligence and to hold your nerve when the markets are falling, handhold clients, I think the value of, and with this whole RIA regulations coming in, I believe this would be actually a positive shift to for financial advisors and industry backed on.
You've given me actually a very interesting segue, because I'm often worried about and think about the impact AI will have on human advisors. Is that a value add? Will there be less need of advisors? Will there be some displacement in the number of people needed in the industry? What's your take?
I mean, great question. That's what I'm saying. That I think this will push you. You will have all the information and access that you need, all the insights, all the data. What you actually need is someone sane telling you, do this, right? It's like word of mouth. You're telling you that I've seen this all. You have to do this. Stay the course. For example, don't sell or buy this or don't panic and so on and so forth. And being able to give you advice through your life stages. कि आज की डेट में I am a X year old. For something, for me, this is the right kind of allocation. This is what I should do with my money. It's very different for somebody who's 70-year-old or somebody who's just getting into investing at 18. And the AI will learn at some point in time, give you a canned answer. But a human being is a human being. So I do believe that financial advisors are here to stay. This story we have seen not just with AI, this story we have seen with machine learning and all the technologies before that. And financial advisors only strength. The wealth management industry is growing globally, and it's actually skyrocketing. And that is proof enough.
Interesting. I will turn this question to you, the next one, particularly about ETFs. Why is there a surge, and what's the attribution to that?
So I think it's inevitable. Look, as India evolves, as you have more consumers, the kind of products our industry offers, not just ETFs and index funds, it has to evolve. And I think that evolution is good. And one of the things I've learned over the last 5-6 years is today consumer openness to new ideas and new products is the best it's ever been. I think 10 years ago consumers were very closed. Today, and in large part thanks to digital and platforms like this, conversations, social medias, people are open. They're almost looking for the next thing. They're bored by the basics. So in that sense, I think, and ETFs have been a category, or passive funds as a whole have been a category that has grown globally. I think passive funds solve a very core problem, and I don't even think it's about returns and who's beating the market. I think it's just there's so much choice out there. If you want a simple solution to investing, passive funds do that. They're sasta, sundar, tikau. They are low cost, they are transparent, and they give you most of the needs. Like many people come to me and they're like, give me one simple thing that you can recommend where I park my money. And I usually say large and mid cap index fund, invest in the top 250 companies of India. Now this is a passive solution. It's a great simple pitch for someone, because I don't need to say, oh, pick this AMC and look at this category. So I think passive solve a problem of solution and choice. And now of course within the ETF and index basket there's a lot of evolution, but I think passive solve a problem of choice.
I'll go deeper with this bit a little bit more. Let's say you're given 10 lakh rupees right now. In today's market, would you recommend active or passive investing?
So I find this or thing very funny, because as a consumer, I would do both. And what the portfolio I curate, as he said, hopefully it depends on an advisor and depends on my needs. So I'll tell you, my own son's portfolio, we have a large and mid cap, we're saving for education. We have a broad market index fund, but we also have an actively managed small cap fund. So we have both. My own portfolio is probably 40% passive funds, 60% active funds. You're sitting in a financial food court. Mutual funds, to quote my book, are a financial food court. There are many dishes, there are many products. You have a diet, your body has needs. You pick the dishes that work for you.
I love the analogy of the food, by the way.
Thank you.
Always makes it so real and relatable.
Yeah.
And I think everyone can associate what portfolio allocation looks like. But with that being said, one of the key things that I'm also observing, and I wanted to bring this up with you, is direct mutual funds. Is it more beneficial for the investor or is it more beneficial for the platform?
I mean, I think direct is a great way to invest for the investor, both for, I mean, platform aside, normal direct mutual funds, obviously there is no cost involved and obviously higher NAV passed on to the investor directly. So, I mean, I would give advice, and if you want to go for a first time investor getting into the market, and if you don't need advice, just go pick, depending on your need, go pick the best set of mutual funds in each category and go direct.
What about pledging, this idea of pledging mutual funds for margin use? Is that having some potential, or this could become like a mainstream thing or more niche?
Sure. I mean, I think as far as pledging is concerned, there is a certain percentage of mutual fund customers who pledge their mutual funds for margin, and it is obviously it's a great capability and it gives you that margin so that you can trade and you can make more money on it. But I don't think that is something which is mainstream yet. It might become mainstream in the future, and even to understand कि ये pledging क्या होता है, और मैं अपनी mutual funds में डीमैट अकाउंट होगा मेरा, अगर डीमैट फॉर्म में म्यूचुअल फंड है, because there are two types of mutual funds, right? One, and then there is this in the dematized form. तो ये सब समझाने में, टाइम लगाने में, उसकी नीड करने में, it is way off. It is, I mean, that dream is way off. That 100% of people are now pledging their mutual funds and trading, etc. And hopefully we'll get to that future as well.
Change the gears to you. One of the concepts that is being often discussed in the investor circles, but maybe most of the people are not even aware. And you are creating waves and always pushing the boundaries. But what is SIF? And what's the potential? What's the use case? Who is it for?
See, if you look at the managed investment solution options prior to SIF, they were in two buckets. There was mutual fund, which, as I said, is food court for the common man, simple products with a sensible set of restrictions because it was for the common man. So there has to be, a lot of FDA or whatever equivalent rigor. And then you had a bunch of exotics, which were AIF and PMS, which were for your high net worth investors who were seeking something more. I think SIF gives you the flexibility as a money manager that AIF or PMS had, but with all the goodness of a mutual fund platform, the ability to do SIPs, the tax advantage of mutual funds, a 10 lakh minimum instead of a 1 crore minimum. So it's taking mutual fund and saying, okay, in addition to running all these basic dishes in my food court, I'm also going to start producing a few higher end meals for the more evolved consumer. So SIF is a part of mutual fund, but it's mutual funds with more flexibility for a more evolved audience.
This has been incredibly interesting to hear all the perspectives that you both have been sharing. What is the one bold prediction that you carry with your investment strategy going forward?
So I think, as I said, the bold prediction for India is to have a 1 lakh crore SIP book. And the dream is to hit 75 crore mutual fund investors, at least by the time we see Viksit Bharat. I don't believe that for investors, the need is to do anything very, very complicated. I've always believed money is very simple. It's about understanding the basics, but also understanding yourself and your goals. Finally, nobody is in this business for a horse race. Where three of us, when we are 80 years old, we are going to sit and compare, oh, you earned better return than me. Finally, we want to say, I worked hard, I earned money, and I used that to live a better life, to see more countries, to give something to my parents, to do whatever, to pursue a hobby, to start a business. So money is towards goals. Good investing is about understanding the basics of products, understanding your goals, and finding a bridge.
I've always loved how you break down the content into so digestible ways that anyone and everyone can understand. I think that has been your overarching mission and theme as well, of making finance accessible to everyone and anyone.
See, the food analogies work on you. Now
Always
you're hungry.
work.
Now you're hungry. Financial food court.
Let's talk about that. But with you, what's your prediction? Where do you see this going?
Well, I mean, I think the sky's the limit, and without taking numbers, I think more and more people will be digital, fully digital. In fact, 100% digital, and people will be using AI freely. And I think India is very well on its way to become a proper developed nation. And with that, the GDP rising, I think mutual funds and other investing classes will go through the roof, right? And more people, I think the vision would be to, even in villages, would be doing mutual funds and investing in equity investing. That to a certain extent, which is already happening. So I think we are kind of still very early stages in that area.
Yeah. Ghar
This
Ghar
has been
Mutual Fund, Har Ghar Mutual Fund.
Har Ghar Mutual Fund. That is the last note that I want to end the conversation with. I wish I could have spoken so much longer, but thank you, Gaurav. Thank you, Radhika, for these incredibly generous viewpoints and certainly valuable takeaways. If you're watching this episode and you found one important takeaway, let us know in the comments and we'd love to hear. See you in the next episode.